Welcome in everybody to the Frogs and Friends this week. This is what episode number 5, I think, here, guys. So we got the full meme pool here, almost. We got almost the whole full meme pool of frogs. We have Adam, we have Ryan, we have Meta. What is going on, my guys?
How's it
What's
going,
going on?
guys?
Yo,
Happy Thursday.
yes, sir.
What's
Always
up?
looking
What's
forward to
up?
these Thursdays now. We
Yeah.
are also have another frog here making his debut. We have Luke. What's going
What?
on?
Not much, man. Just fighting the good fight out there on X. Getting into it with Simon, getting into it with Matthew Cratter, and
Yeah, some Josh Mann there, back in the day, right? Back a couple
yeah,
months ago.
yeah. Haven't been able to troll him in a while, but
That's a shame. That's a shame because we always like seeing what you had to say. And then obviously Adam got blocked too. I think a lot of our frogs got blocked from Josh Mann just for him spouting silly shit. So, guys, do we want to jump in here? We're recording this on a Thursday. So, do we what? Yesterday we had the Fed hold rates. Jerome Powell kind of came out and said, "Hey, we are gonna hold rates here, and this will be my last time talking to you as like the Fed chair." So now they did keep rates the same at around 3.5 to 3.7%, and but the biggest I think thing with the rate keeping the rates the same was that there was a lot of dissenting votes, like more than any since like what 1992 I think it was. And so like the Fed is even like fighting within itself even before like Kevin Warsh is coming in here and probably just gonna blow shit up. But it did anyone kind of take anything away from Jerome Powell's speech
Yeah.
yesterday?
So, Crash, did anyone look into the four dissenting votes? Were they for rate increases or rate cuts? Were they
Oh,
dissenting because they didn't like keeping it the same, or did they want rates? So I thought he was gonna just basically say "fuck you, Trump" by raising rates, but it sounds like he's doing a "fuck you, Trump" by staying as a governor. And
yes.
essentially, it sounds
Yeah.
like his reasoning is because he wants oversight on the current investigation into cost overruns.
Hmm.
I mean, that sounds like just trying to protect the fucking hen house, right?
Yeah. I think
I don't know.
also
Anyone else on that one?
I think also a possibility is he wants to stay there as governor so he can kind of get some kind of legal protection as well. You know what I mean? Like,
Oh, that's a
'cause
good point.
even though like the DOJ or whatever came out and said, "Hey, you're off the hook," kind of right now. I think he's still not sold on that in the back of his head. I mean, that could just be a smaller reason or not even a reason, but I think there's something in the back of his head that's a possibility anyway.
you
Just
know,
uh, just asked Grok real quick what the dissenters said. Stephen Murrin dissented in favor of cutting rates by 25 basis points, and then Beth Hammock, Neil Kashkari, and Lori Logan said these three agreed with holding rates steady, but dissented because they opposed the easing bias. Language in the statement that they continued to suggest the next move was more likely to be a rate cut. They preferred more neutral language and did not tilt toward future easing. So it
Mm,
sounds like they're
okay.
kind of, yeah.
So that kind of goes into what Trump calls JP, too late Jerome. If that's the case, then because I thought it was the other way. So like they did want to do some cut rates, and then the other half or whatever said, "Nah, we're gonna keep it the same. We're not gonna change anything here." So it is interesting because that kind of means that when Kevin comes in, they are gonna just like try to cut like hell, and that because what May? It's the middle of May when Powell like officially like should step down, like the end of his term. So yeah, that's gonna be interesting. Like, because that's where I think the rubber's gonna meet the road, at least for being able to take out cheap debt and to really like spike the economy here, and obviously like Bitcoin and the assets and shit, and just build. And that goes into the semiconductors as well, AI, and that's kind of what we need with these data centers and stuff. It's just all going trying to outgrow the issues here at the end of the day, it seems like.
I don't know. Did you guys watch any of the hearings with Warsh at all? Did you see kind of any of his comments or statements regarding how inflation is calculated?
I did not.
So he was kind of referring to like the Fed's current calculation is outdated, and
Mm.
essentially it's not capturing a lot of these outlier expenses that are increasing, but it's not reflected in the Fed data. So I don't know how you want to read that, but essentially it almost sounds like the new calculation is going to show true inflation.
Well, and he also one of the clips that made it to the Telegram channel was talking about how AI is going to bring about deflation. So
Right.
from my understanding, that was his argument for why we should be lowering rates, because inflation will be controlled in that way.
Yeah, I've seen that too.
Yeah. Yep.
So,
Yeah. No. So it's an interesting read. Yeah, because if we do go to, like, let's say, reporting true inflation rates, because we all know it's way higher than what's reported, that would be a significant baseline for showing the deflation.
Mm-hmm.
Yeah, I
Yeah.
think they have to. You need something tangible. True. Does anybody look at Trueflation? Because I listened to Sailor a couple times mention that, and I kind of trust his math more than anybody's, and plus you can kind of see it just in cost of living.
Mm-hmm.
But he said it was more like, I've heard between 8 and 11%. It fluctuates between those numbers, but I think Trueflation, because Pompliano refers to it when he's talking to Visser, said it was somewhere. Last I heard him say it was somewhere in the neighborhood of 4, and then there's of course CPI, which is basically what Warsh is referring to. So the question is, what is it really, right? Because there is an exact way, I think, probably to calculate that, but I think it's different depending on if you're just an average person and you're dealing with housing costs and groceries and things like that, and energy and gas and fuel and all that stuff, versus the way that sort of like uh, financial system sees it, right, and the way they measure it.
Mm-hmm. I feel like it's higher than that. It feels like it has to be higher than that for the average person, especially, well, depending on which kind of state you're in, I would say. But 11% even still sounds a little small, a little light.
Yeah.
I did a thought experiment on my own. I wanted to see, kind of the monetary inflation. So I took 1965, before 1971, and I
Mm-hmm.
looked at the median household income. I think it was like $6,900 a year. And if you take that over the M2 money supply, and then if you normalize today's median household income, uh, I guess you'd be kind of normalizing it backwards. You'd be normalizing the 1965. If you set the M2 denominator to, I think we're at like 22 trillion right now, instead of back then it was like 30 billion. If you set that and you keep the ratio the same of the 6,900 over the 33 billion, the median household income would have to be $450,000, to keep that ratio the same. So
Right.
I think that's kind of one way to look at it. And obviously there's, some nuance in there of, we're sending a lot of our money overseas, and, it's getting not all going directly into our economy as much maybe as it used to back then. But overall, it's a pretty good way to show how much they've actually stolen from us over the years.
Yeah. And I would say even a short amount of time, because like you said, since 1970, 65, 1970, 71, like that is only what, 50, like a little over 50 years. So in the grand scheme of things, that's a pretty short time, I would say. But a long enough time though to where it's between a couple generations and they don't really feel it like right away, you know.
Right. Slow enough that we don't fight back, but
Yeah.
pretty quick overall.
Yeah. Yeah. But it, like obviously if you know what, like can see what's going on and see how your parents lived, how your grandparents lived and everything, then it's like, okay, yeah, then something is going on. But most people don't even take 3 seconds to think about shit or look around anymore. So that is an issue then too. Just, and ignorance is bliss at the end of the day when it comes to that kind of thing. It's just the way it is. That's the term that a lot of people like to say. It's just the way it is, man.
Well, it's amazing that something as goofy as the sort of removing thumb magic trick is enough to seemingly trick everybody about like the actual most important thing that a human being, one of the most important, if not the most important thing for a human being's survival. It's so amazing how many people fall for the lie, and don't know what it is and don't understand it. They just don't know. As long as the number stays the same, that's all it takes to trick them.
yeah.
And then they go on about these rising prices, or it's just crazy that they don't. It's like, yeah, that's not what's happening, but yeah, okay, I guess. It's just crazy to me.
And that's the thing. Me and Adam were talking about this. Like, how doesn't someone like I'm in my mid 30s, like, and I see my sister's a generation below me, and like even kids younger than her. Like, how doesn't someone, and this could go for any in any age, but like, how can you like do something like your work, like work at a job that you hate and get poor no matter how much you work. And over time, you just see that and you feel it yourself. And you see some situations are worse for other people. But it's like, isn't there something burning inside you? Like, for me, there was a hatred like that was so strong to just waste my time and like not have anything to show for it. And it's like, that does no one else have this hatred to like want to figure out the cheat code or want to figure out like the answer to these problems? Is it just easier for people just to bitch about it and then just keep going the way that it is for them, or do they actually want to do something about it? Like, I don't know. Maybe they say they hate it, but I don't know if that's like the hatred burns inside them to want to change things and want to learn about this kind of shit.
That's been the whole purpose of my last 2 years of going down this avenue, man. Like quitting my job and not being a tax slave and going on the Bitcoin. Everything I basically have is moving to Bitcoin, and then getting into these TFSAs with the ETFs for income, like tax-free income. Like, I mean, I'm just trying to exit that system as hard as possible. So with the tools that are available right now. So I don't know. That's me, anyways. But I'm sure it's everybody here too.
Yeah.
So.
Yeah, certainly. Certainly everyone in here, it seems like we kind of have that hatred, and we're trying to find a different way here. And
They don't
but
know.
like,
They
yeah,
don't
go
know
ahead.
where to put it though. They don't know where to put it. That's the problem. Is because they don't understand what's
Yeah,
actually happening, and because they're not sure of it, that they just like to kind of blame the things that like sort of the sort of influencer mechanism of the system tells them it is, right? They like to blame capitalism. They like to say it's greed, corporate greed's one. I'm not saying that stuff doesn't exist, but that's not what's going on, right? That's
Yeah.
not the
right,
main
yeah.
driver of it. So they're misled. So I think they might hate. I think they have those strong feelings, but they're just not aimed at the right cause. And
But
so, yeah,
let me counter a little bit with that, which I agree with most of what you said. But at the same time, that person isn't enough. Like, don't you want to figure out, okay, how are other people doing it then? Like, what am I doing wrong here? Like, why are they like this and why are we over here? Like, there's obviously something that they're doing, like Rich or whatever, people that are doing better than me. There's obviously something that they're doing that I'm not doing. So, like, it's just which we always come back to every week. It seems like the term ego has a big part of it and the
hmm
willingness to learn. And which just those two things in general, like, 90% of the people, the contestants are off out of the game right there. And it is a game at the end of the day. Do you want to learn how to play this game? And it just even if Bitcoin wasn't even around, Bitcoin obviously changes everything. But like even if Bitcoin wasn't around, you could still play the game correctly. It might not be as fast or it might not be as big, but you could still, I think, be able to better yourself using the same kind of strategies which we're going to talk about later today and so in holding assets.
Yeah, my first solution was to start my own business.
Hmm.
I didn't like working for somebody else. I didn't like somebody else controlling my time and, paying me what they think my time is worth. So my first solution, I'm going to start my own business. And I did that. And Now years later, I've learned about Bitcoin, and now I'm selling my business and I'm going all in on Bitcoin. So I think some of us in here, we have that kind of deep hatred for the system, especially the fiat system that's constantly robbing from us and stealing our energy. But I feel like most people, you're told, this is how it works. You go to school, you go to your sports afterwards, you have to get good grades to get into college, and then you get your job and you work 40 to 60 hours a week the rest of your life. And that's just how it works. And I think people just accept that rather than question it. Maybe it's something, a certain personality type. We see, the certain personality type drawn to Bitcoin, maybe that's what it is. Maybe it's your personal experiences, but it just seems like most people don't have that drive to change the situation and just would rather accept it. I think there will be a turning point where it's easy to go on to the Bitcoin standard, the new system, but we haven't really hit that yet. That's when the masses will agree and be like, oh yeah, this is way better. Why have we been allowing the Federal Reserve to print away all of our energy, our entire lives? We'll get there, I think. Maybe they won't quite have the full light bulb like that, but I think the Bitcoin standard is going to be imposed until everybody. It's safer to jump on board with that than it is to stay in the fiat system.
Yeah,
Guys,
so
it's not a coincidence they don't teach kids about the way the system really works in school. They don't want to show people the cage.
You want to fight? You'll never take my Bitcoin. Like, share, subscribe to Frogs and Friends.
Sorry, Adam, go ahead.
No, that's okay. I would agree with Luke. It's like the 80-20 rule, right? 20% of the people do 80% of the work. There's only so many genetics of people that actually want to strive for greater things. A lot of people are very content with status quo. But I think those people, to Luke's point and Meta's point, are going to get disrupted here because the employee-employer relationship is going away. We're all going to have to be self-employed in some sort of way. So that's coming. I mean, the Moonshot guys talk about this all the time. Peter Diamandis is always talking about. I think his last show, they were addressing that particular issue of people who don't want to be entrepreneurs are going to be forced to be entrepreneurs. And really what he was trying to do was diffuse the understanding of what an entrepreneur is. Because Luke is an entrepreneur. I'm sure he works his ass off every single day. Me as an entrepreneur, I work my ass off every single day. But the nature of that's going to change. It's not like all the tools are there. The cost, and they actually did this great graph too. It was showing the cost of starting a business today versus even 3 or 4 years ago is down like 97%. Mm-hmm. So that fear factor of, I don't want to get in debt, and what if I fail? That's going away. And then the rest of it really just comes down to, when you own a business, it's personal accountability, because any action your employee takes, you take, comes back on you no matter what. And people are scared of accountability.
Well, yeah, because you can't just check out at the end of the day when you own your own business, as we all know. And, like a lot of people just want to clock in and clock out, and they're told right from the get-go, like as a young person, that there's 2 things certain in life: death and taxes. And who hasn't heard that mantra before, right? And it's just that's what you're basically taught. And there's so many people that will protect this system that taxes them and steals their energy, like energy vampires. And because how many people still, like, you go out and talk about how the tax rates and stuff, especially in Canada, which is ridiculous. And there's people that, we need taxes. It's like, I just give up. Like, I'm not even going to talk to you and waste my time, because like it's these people are protecting it's just unbelievable. You know what I mean? You know where I'm going with this.
Adam, you kind of, sorry, Ryan, go ahead.
And that's why I think they're going to be dragged into a Bitcoin standard. They're not going to go willingly. They're going to be reluctant to this change. Mm-hmm. once they're there, they'll go, oh, okay. Some of the
This
common
is way
sense of the
easier
light
than I
bulb might
thought.
kick on, but it's going to have to be forced. It's not going to be a willing thing. I mean, we've had 17 years of Bitcoin, and like you say, retail's probably almost already there, and then the rest of them are going to have to be dragged across the finish line. I think so.
Mm-hmm.
That's my
So,
opinion, but we'll get there. I'm sure we will. So,
Adam, when you said it's 97% cheaper to start a business now, I think that at some point it's going to feel safer to start your own business than to stay on with your employer where they could fire you any day.
100%.
So once that we cross that threshold, because right now it is hard to start a business. You do need some capital. You have to give up your your steady paycheck and take a risk. And it's kind of scary. I mean, it's not for everybody, but at some point it's going to be scarier thinking, man, I could lose my job any day. Maybe I should start my own business where I'm in control. And, even though it's, a little bit more responsibility than I've had before, it feels safer to be in control than it does to be at the whim of this corporate enterprise that's going to fire me for AI any day now. So I think we'll reach the same kind of threshold with Bitcoin, but it just takes time.
Yeah.
I want to give an example of this for viewers, whoever watches this, right? So right now I am stuck in a situation where I don't have any problems to solve. But anybody who's working for an employer right now solves problems every single day. That's their job. That's what they do. With AI, they can easily build agents to do their job. So whatever job they're doing, they can build an agent to do that job. And then they can say, hey, you know what? I bet corporation over here has the same kind of job function. I can just take this, copy it over here, reduce their cost by 75%. You pay me 25% just for my agent. It's a 360 win, and they could just go do that over and over and over again at a nominal cost. I mean, a $20 subscription to Claude Code, and then you're on your races. What do you need? You need two clients maybe, and then you're replacing what you were making at your own job.
Mm-hmm. Yeah,
I mean, there's so many instances of this. So it's just find a problem, solve it with code. Period.
Yeah, I agree with you. Man, I want to bring up that point that you brought up a little bit ago, and I think a lot of people don't talk about it. I think a lot of people it flies under the radar is when you said about kids in school they don't teach. They don't teach you. I mean, how to do jack shit. Okay. Tell me when all of it last used calculus or just random bullshit. But like I remember being in 11th, 12th grade doing taking an electric or an electoric math class was business math. And I was all excited to go in that. I'm like, okay, I'm gonna figure some shit out here. And it was very disheartening that we didn't learn about the stock market. We didn't learn the only thing we learned basically I can remember is how to write a fucking check. That's the only thing. And it was like one of my favorite teachers too. Like, and I literally said to her, I said, why are we not talking about like stocks and stuff in here? Like, or how to do anything in the stock market or anything about money, like, or no money management or anything. I think but obviously to your point, Meta, that doesn't make a good slave is when you know
Right.
how to, finance yourself or just know what money even is to begin with, other than, oh, hey, I'm going to buy this coffee here right now with this, or,
Yeah.
it's horrible. And that was even what, 20 or 15 years ago now since I graduated. So
Yeah.
like, what the,
By design.
yes. Yeah.
Yeah,
100%.
it's by design. You know, Adam, to address your point and then kind of bring it back to your comment there, Krash. So I just saw a story and a part of them's gonna remember parts of it, not the specific details, but basically it was this kid that had younger person, I'm gonna call him a kid. He had figured out that there were the problem was that there were small, mostly like local contractors and businesses that were operating and without website or web presence, they weren't really capitalizing on essentially their good reputation and the good work they were doing. So what he did was he went and I think he like scraped Yelp and Google reviews and found these companies using AI, and I think he was using Claude, and he put together all of that information and built them a website, and then he reached out to them and he would demonstrate it for them. And he basically could do all of this in about 40 minutes. That was the numbers that they were using for the more recent one. And he basically sold them the site for $1,000. So he made $1,000 in 40 minutes
Yep.
tapping into using tools. Now here's the thing though, right? So he's really savvy, and now people know that that's possible, and there's all these other things. There's going to be people that are doing that and competing and driving the prices down. So that's all part of the earlier statements about deflation, right? Like my previous employer, the president of the company, just reached out to me yesterday, and I talked to him this morning to tell me that I was right. I left that job because I basically told him, like, look, man, I'm a product manager. I'm basically an analyst. I'm going to get replaced incredibly fast by this technology. I could see it coming. And I said, and also a lot of the developers, engineers will be replaced. Now, I know there's also scenarios where they're hiring more engineers. I think it just depends. But he called me today to tell me I was right. They don't really have any engineers left. They don't even need a product manager anymore. They're building a product. And they also know that they only have a certain amount of time to sell the company for this product that they're offering. It's a pretty novel idea. It's a very good idea. But the point is that everything is being eclipsed by this deflationary sort of storm cloud that's coming in. So to all the points earlier about people like learning how to be entrepreneurs, and also like we're probably heading into a future where it's just not as necessary. Now, I'm not saying you should just like flip a coin and not chase those things. Like if you have a good idea or you want to open a business, by all means, go ahead. But understand that we are moving into a future where abundance is more than likely, and that any bets on that kind of stuff, don't get too attached to the idea of monetary gain from it. Do it because you want to do it, right? Do it because it's something you're passionate about. To that point, but they don't teach us that. To go back to Krash's point and my earlier point, yeah, they really are like the whole Prussian school system it's more about indoctrination than it is about enriching people via knowledge. It's none of the stuff that matters in life. Very few things are. I'd say home ec and gym class are probably the most relevant things that at least I don't know what kids are learning today, but I also think that it's more obvious today that schools are really just indoctrination camps. I saw a recent video of a woman sort of comparing homeschooling using AI assistance to the way kids are taught in the public school system and even the private school system, and it's appalling. And it's like so they have such a big advantage if they're being taught outside of the existing system. It's incredible. And in the future, I don't even think anything that they're learning in school is going to be relevant to them.
No.
I mean, it's not. It's just all indoctrination,
Mm-hmm.
with the exception of the math and science type stuff. And of course, that stuff has practical use. But yeah, I don't know how much that's actually applied in the real world by most people.
Right.
Or how much it's focused on at school either.
Mm-hmm.
So before we move on from the Fed, because we started this conversation with the Fed, I did want to ask, because I didn't watch it, I didn't pay attention too closely. How serious was Jerome Powell kind of threatening to stay on beyond his end date? Or I heard technically he could stay on till 2028. Do we have any context around that?
Well, yeah, he just as a governor though, he's not going to be the chair.
Okay.
But he is pretty deadly serious about it.
Gotcha. Okay.
I got a question for you fellas on that. I'm just playing devil's advocate maybe a little bit, but is there any benefit to Jerome Powell staying on by like white hats or something? Like, we talked, or maybe it was G or something was talking that Jerome Powell's Trump's bitch, right? So like, or do we need a big print coming up for something, or is there something behind the scenes? Like, are they stalling because maybe things aren't 100% ready to go? I don't know. Like, I'm just throwing that out there, seeing what your guys' thoughts are.
Sure, you could theory craft something, but it's hard to say, right? I mean, like none of this stuff, it's all narrative layer artifacts essentially, unless you want to believe that it matters. Like I don't even know what effect, what that means, right? Ultimately, what kind of power or influence, and if all this stuff isn't to some degree scripted, I really don't know. It's fun to think about.
does that mean he gets a vote?
And hose.
Yeah, I mean, is it essentially like a because I don't know if you guys remember when Trump was focusing on that one Fed governor that was constantly voting to raise interest rates.
Mhm.
Some chick, she
Yeah.
they indicted her for mortgage fraud or something like that, right? And then
Mhm.
they knocked another governor down that was also a problem. So now you've got Uncle JP stepping in there to add another vote in the favor of the globalists, or to Ryan's point, is he one of our boys and he's there to, take the fall when it's needed?
Be the
Be
bad
that
guy
be that last vote.
before you make Warsh look bad. You might as well make Jerome Powell keep looking like an asshole if that's the
Right.
case, right? So yeah, I don't
Right.
But
Yeah.
my initial thought was that he was going to try to remain chair, and I just thought it was teeing up, a confrontation between the White House and the Federal Reserve, and I was kind of excited for that
Yeah.
confrontation. But being just a regular member or whatever, maybe that's not the case. I'm not sure.
I
Well,
mean,
they ain't gonna go without
it's
a fight,
possible.
right? So that's the
Mhm.
thing, right?
Yeah.
We're
I mean,
talking
he's
central bankers
definitely
here.
out. He's definitely
Yeah.
out as chairman. That's 100%. That's done. It's just a matter of, is Warsh confirmed in a vote? Sounds like that's going to happen. I'm just wondering if he still gets a vote. So if he gets a vote, that's how he can start fucking with the agenda.
Yeah. And as a governor, he would. So I think to your point, JP was like usual yesterday, monotone shit, like nothing crazy or off-putting. But I think, like I mentioned earlier, I think it does come down to whether those charges are going to be pressed against him. I think that's what he's worried about. And now, if he, obviously that could be all kayfabe and shit. But I think because obviously Trump was like, no, yeah, we're going to press charges against you and all that shit, for what you did and all that stuff. And then that's when JP was like, "No, I'm not leaving." Then, like when they
Yeah.
were going back
Yeah.
and forth. Now, what was that? Like a week or two, or maybe a week? Maybe not even a week. Uh, DOJ then came out and said, "No, we're going to drop charges on JP."
Yeah.
And
Yeah. I
then
was just
that's
going to
when
say
his
that.
tune
Yeah.
started changing too, because I wasn't expecting that yesterday. Him just to come out on that day, that was actually a little bit of a surprise. Even like the Fox business people were kind of like surprised, like as he came out and said that. He said that like within the first 5 minutes of his speech yesterday. So it's not like uh someone had to pry it out of him or whatever the deal may be. I don't know. I just think that might be a little bit that's certainly in the background, I think, is whatever the charges end up doing. So
The revenge of Uncle JP coming.
not Uncle Joseph Stalin, Uncle Powell. All right, so that's kind of our thoughts there on the Fed meeting yesterday, but quite interested to see how they will cut rates in the future here, especially with after May 15th. But we'll move here to let's talk a little bit. We haven't, as much as we all love Michael Saylor and MSTR, MicroStrategy, we haven't necessarily talked too much about that the first couple episodes here. So now we have talked about Stretch, obviously, a lot, but and I'm sure we're going to talk about it here again. But we're going to talk a little bit about the common stock or just like Michael Saylor in general, because like Luke wanted to bring it up that there are so many haters out there. It's like if you're on X, the shit's pretty thick there. Like there are a lot of fucking people that just are clickbaiting type posts, just creating drama, FUD, if you will. Like you do have people saying, oh, MSTR is a Ponzi scheme. Sailor's going to get liquidated or margin called if Bitcoin goes below 75. That number seems to always change too every week now. He's only diluting the common stock. Like that's part of the Ponzi scheme. So, Luke, since you kind of wanted to bring this up, I'll throw the ball here to you first. What have you seen, like with Josh Mann, or just Simon Dixon, just like anyone in general, like that's just throwing FUD out there? Anything you wanted to touch on?
Yeah. I got into it a little bit with Simon Dixon this week. He blocked me. But it seems like the comment that got everyone, all the fudsters on X fired up was talking about injecting Bitcoin into the DeFi, crypto sphere. And, I think people are trying to paint him as a shitcoiner, but really they got it backwards. He is siphoning their capital. The example is, I think it's Apex.fi, I think is a crypto token. They're buying Stretch and holding Stretch, and they're offering, some spread, some return lower than 11.5%. I think it's like 10.5 or something like that. And they're keeping the difference. And, there is some benefit to that. It's available, being a crypto token, it's available to more people in the world outside of the United States than Stretch is. Not everybody can go on to their brokerage and buy Stretch. So there is some benefit to that. It's unfortunate that it's on a shit chain or shitcoin chain. I'm not even sure what it's on, but I know it's not, a Bitcoin chain. But really what's happening is MicroStrategy through Stretch is siphoning the capital out of broader crypto and buying Bitcoin with it. So I don't see where the haters, have a problem with that. You're taking capital from this pool over here that's crypto that we don't like. It's centralized. It gets frozen all the time. You hear about, oh, we froze these accounts, or, it's controllable. And you're bringing it into Bitcoin and converting all that capital into Bitcoin and growing the Bitcoin network. So I don't have a problem with it. I got into, some arguments with some people on Twitter about it. That's just the latest FUD. There's always the Ponzi scheme. What happens when Bitcoin goes down and he can't pay Stretch's dividend, and, it's all going to zero, and, it's just nonsense. We know if Bitcoin fails, MicroStrategy fails. We know that. That doesn't mean it's a Ponzi scheme, because he's investing in an asset that we all expect to grow, and he's creating these different instruments to bring over capital from other pools that are not just strictly Bitcoin maxi. I've heard you guys mention it in previous weeks. The sound money maximalist, most of those people have already adopted. Now we're moving on to, hey, we need to hold a carrot out here, 11.5% dividend on your money. Now we're bringing in a lot more normies that don't, they don't really care about self-custody. They don't care about, the sound money aspect. Maybe they would if they learned about it, but they just don't have the time to think or learn about it. It's not a priority. But now we're bringing in that money as well. So just like through Apex, they're siphoning capital from the crypto industry. You're siphoning capital from the fixed income industry and everywhere else in the fiat world, and converting it to Bitcoin, expanding Bitcoin's footprint. The more that capital that's coming into Bitcoin, the less risky it is for all of us, that are all in. It's a lot less risky when we have these huge pools of capital coming in and pumping our bags, for lack of a better word, but not that they've been pumped yet. But
yeah, I totally, I can't stay on X or like any of these other apps that talk about like stocks or MST or whatever the topic is. Because to your point, you get all this shit, and it's like, dude, have you guys not like looked at the balance sheet or like figured out what has been going on the last couple of years? Like now, granted, like not everyone loves this shit like we do. I understand, that like that is a chore for people, but at the end of the day, don't talk shit. Then, like, are you a paid fudster? Then, are you a bot? Like, what's going on here? Or just a natural bear, like bearish on everything?
Yo,
Yeah.
Luke, you brought up something interesting, right? Like, so the positive viewpoint of consolidation. So MicroStrategy holding a significant portion of Bitcoin makes us safer, and the opposing argument typically with the fiat crowd is that makes us more vulnerable. And I to your point, well, Sealer actually he said this in an interview. He's like, the more that the old wallets start transitioning into the new wallets, because everyone's going to know who has that coin, the safer Bitcoin is going to be. And I think we've been going through that for the last year, is that turnover. And that those unknown pools that are sitting out there today are probably dwindling, which is a very good thing, right? So everyone knows who holds the diamonds. The second point here is, I don't know how you could be a Bitcoiner and throw shade at MicroStrategy. I just don't understand the connection between the two.
Yeah.
The more adoption, the better. And you're talking about a vehicle that is going to help everyone who doesn't understand how money works, doesn't understand how Bitcoin works, transition into a Bitcoin world through a fiat tool.
Yeah. And the other thing too is, like, there's this idea that I mean, really what he's doing is it's better to think of it as like an engineering feat than it is to think of it as what people typically think of as money. It's a machine, and it's an extraction or a transfer mechanism. And the more, and the other thing is too, is it's enabling where most of the capital, as G always talks about the capital markets, but it's the fixed income market, the hundreds of trillions of dollars that's being allowed, or there's a mechanism for it to, and incentivized for it to move to a higher yield. And then it drives up the monetary value, or the fiat measurement of Bitcoin. And in doing so, it allows access to, you're gonna see some type of product that just makes it as easy as a bank account that's backed by STRC. It's going to happen, and of course, you already have it in DeFi. So that's really probably, I think a lot of the FUD and a lot of the shit talking around it, I think some of it's just ignorance, and I think some of it's just ill-informed. It's just kind of like haters, or they're controlled up. There's some type of a controlled force, right? There's this sort of they're fighting whatever narrative is being sort of steered, which like you could say that's possible. From on the Simon Dixon side, it's possible that that's what he is. I don't know. It's very strange the way that he really goes into some very specific detail, and it's like, how could you possibly know that? Well, I'm an insider, I have this information, and blah blah blah. And it's like, well, yeah, but like, I don't know. That doesn't. I'm skeptical of anybody. I don't even care if they're saying things that I agree with. I'm skeptical of, like, people that just claim to have this information as if they know something, instead of they believe that something is going to happen a certain way. There's too much noise in the sort of narrative layer currently to really be able to pin anything down and to say, yeah, this is absolutely what's going on. But back to the initial comment, it looked, we talked about this last week, but when I first started looking at Bitcoin, I thought, like, yeah, everybody should own this, and this is the way they should buy it. But then I realized every time I tried explaining to people the whole energy transfer and everything, they just really struggled. They still see value in currency. In fact, I have somebody 100%. Very close to me who's saving up for a house, right? And they've got let's just say $50,000 saved up for their down payment. They don't understand they're on a treadmill. It's even worse. They're taking 2 steps forward to go 3 steps back. The housing market, until it corrects or till the value is appropriate, they will never achieve their goal. I just don't think it's possible. $50,000 isn't anything, right, in today's price environment. So, but the point is that this is somebody that I told to start buying Bitcoin, back in the 30s, right? So, but they did not see that the simple thing I was trying to, they just can't see past the corrupt fiat layer to really know what. And I understand there's the appearance of risk and all that stuff, and so that's what I think, that the chances of them being exposed to something that is a vehicle or something bolted on top of an STRC like instrument is way more likely in the near term than them ever just saying, yeah, I'm not going to save in dollars anymore, I'm going to buy Bitcoin. It's like, or you could just outpace whatever inflation ends up being after we adjust for, after this incoming wave of deflation starts to hit, and that becomes the mechanism by which they can control it as to not disrupt the natural sort of balance of the market, right? They sort of put this like it's almost like a governor for that process, so they don't really break it. It kind of like adds like a safety vest or a helmet to the entire transfer. So that's kind of how I see it.
Let me throw out a somewhat of a theory here that I thought of recently, and I want to get your guys' thoughts on this as far as MSTR goes, and or Michael Saylor just in general goes. Obviously, we believe in the white hat to black hat shit. Yeah, some kind of plan going on here behind the scenes. Now, obviously, Bitcoin's been around here for 17 years. And now, if you are a white hat or like someone that's inside this plan, and you probably have to be disappointed with where retail is right now. If Bitcoin is the weapon here, like is like what a crux of this plan. Um, I would have to imagine you would have to be disappointed with where the common person is with even knowing what fiat is now, still to this day, and then let alone not even know what Bitcoin is. So do you think with how fast it seems like Sailor has like ramped shit up the last year specifically, but like we could argue since he did that 21 plan like 3 years ago, do you think that's kind of like white hats nodding like, okay, we're kind of behind schedule here. Like we kind of retail's this is as far as retail's going to take us here, or like the common person's going to take us as far as like the civilian military joint operation. So like, what do you guys kind of think? Do you think like,
It,
yeah, Sailor is here as like an aid for
Can I
us?
jump in on this one real quick?
Yeah, please.
So
yeah,
I'm gonna come at you and say that they're right on time.
yeah.
I think they exhausted out retail, and they're like, okay, we got to get the wider masses. We have to set up the system for the wider masses to transition, and I think that's where we're at. And Sailor had to ramp it up, and he is feverishly trying to buy as many coins as possible right now. And it seems to be starting some form of institutional FOMO.
Uh-huh.
And once that institutional FOMO really gets rolling, the transition is going to happen quick.
Mm-hmm. Yeah. Well, and I would also argue to like I agree with you. Like I'm on different angles here. I can see each side, and I think I feel like it's. I guess the bigger question is it more of an organic? Like, is this possible to that this was even organic? Like the last couple years?
I don't think so,
It,
man.
yeah,
I personally don't.
Yeah.
I think it starts to get a little weird if you really dig into this topic. And trust me, I've sat down with some people close to me and thrown some things out there, and meaning I think you start to get, if you look at it through the lens of like the nature of reality. I know that sounds like a real departure from the topic, but it, and I think that it's highly unlikely, in my opinion, logically, that that mechanism, that the entire strategy phenomenon, even Michael Saylor is a sort of like a character in
Yeah.
this theater that we're watching. It just feels, and it could just be again, like you back away from this far enough and squint. It's like, is it it's like a script, right? The timing of it, I feel like, to Adam's point, it's sort of like almost to some degree feels too. It just doesn't feel natural. It feels scripted. It looks, doesn't mean it is. There could be some other force at play here. Some people even like to lean on, the idea of some divine force, which could be what I'm suggesting here. I don't know, but it just seems highly unlikely. It's almost like the bases are loaded, and your sluggers up to bat to hit a home run, right? To knock it out of the park and bring in a grand slam. So
Mm-hmm.
there's just too many things on the board, and then the timing of the admiral's
Yeah.
statements
Yeah.
and all of it, right? And even the So like G just did an interview and he mentioned this. It's like, why is the US, why is Trump actively or like if you know what Bitcoin is and you can't you know, understand that there can be no petrodollar, the dollar itself cannot exist like it has in the previous decades. So why would the US remove that capability from its arsenal of power projection? Why would it
Right.
do that? What sense is it? And it's a really good question. It's like that doesn't make any sense.
Yeah. Meta
So
oh man. And then let's couple this with AI and robotics. So
mhm.
Going back to what Ryan said earlier, everyone's understanding is you're going to work until you die and you're going to pay taxes, right? Those two, actually, all three of those fundamental things are changing at once. So you have AI and robotics taking over labor. You have Bitcoin taking over currency that was once or usually always held by some sort of nation state. And this currency is going to pay you instead of you paying taxes to maintain. So all these things are happening at once. So to me, this being an organic transition or transition doesn't compute.
Mhm.
Yeah. And if you play it out, like if you take what's going on right now to back to Adam's point that this happened at the right time, if you actually play it forward, a lot of what strategy's role in this looks like is it go back to the governor comment, right? Like some kind of a speed governor or like a release valve for to kind of keep things in balance, right? Because I don't think you want to destroy anything, right? I don't think you want the boomers to lose everything. I don't think
Right.
there needs to be some day of reckoning. That's just not the way reality has worked in my life that I've noticed. I just don't think that the likelihood that it's going to be some extreme swing. It doesn't mean there couldn't be some rugs along the way, but I think that if you look at it through the lens of, first do no harm, I think you have to kind of stay within those boundaries. And the other thing too is you don't want to destroy the economy. You don't want to destroy the things that are working.
Yep.
Some of the manufacturing things like that. So I think if you look at it through that lens, it kind of like a lot of the stuff that strategy's doing by using that as a mechanism to sort of like absorb the old system. And then it's on a Bitcoin standard. It's not the way any of us thought. And then I always think about that kind of smug Pepe grin Sailor had when he said that sometimes you win in a way you don't expect to. And it's like, I don't know, man. He might have just said that, or he may have said that knowing that there was a bigger picture. And that suggests that Sailor somehow read it on some part of this thing. But it's like, I don't know. None of it feels like organic.
Man,
That's
Meta,
just subjective from my
that brings
perspective.
up something Krash said. Krash, you shared something with Sailor. I haven't watched it yet. I bookmarked it to watch it, but you were saying, does Sailor know something that's coming up in July? What was that?
Oh, yeah, he was like, yeah, May's gonna be interesting, June's gonna be interesting, and then July, he kind of just like does like a little smirk and gets off that topic in the when he was doing his keynote at the Bitcoin conference.
Oh, okay. Yeah.
Do you guys think it's the fourth the 250 year?
That's what I
I
told
think
Adam
it
last
is.
night.
Everything's aligning.
Yeah.
Does seem like everything's aligning there.
Yeah. Well, and then to that point, I want to get Luke's thought because we have used his quote a couple weeks ago that Seda and Stretch are eating up the bear market. Luke, do you kind of want to touch on that a little bit? Like, does that kind of line up to like, hey, in 2 months, which would roughly take us to July, shit's gonna be different in that
Yeah.
within 60 days here.
Yeah. I kind of, I like to do these kind of thought experiments in my head of let's look at MicroStrategy's average weekly buy over the last couple of years. And I looked at that and it was about, when you average it out, it's about 5,000, 5,500 per week, kind of depending on where you start your kind of modern era accumulation. So I think I started beginning of 2025 or maybe 2024. I can't remember, but either way, it seemed like the market was kind of at an equilibrium where MicroStrategy is buying 5,000 coins per week. Well, right now, that's 20,000 a month. Right now, he's buying, almost double that, 30, 40,000 a month. So, my theory is back in 2024, when he started getting those numbers, the market reacted by shorting, MicroStrategy stock. I think that was back when it was 3 or 4 times MNAV. And they just, the short attack came in strong. And that's how they were able to, get his buys back to a equilibrium level of roughly 5,000 a week. This time around, Stretch and SATA and I guess those are the two right now. They're not as easily attacked, I don't think. A short attack on Stretch, I've thought this through, and it just seems like the incentives are too strong to drive it back to 100. If they get it down to 80 and you can buy in at 80 and get, I don't know what the effective rate is on that, maybe 20% or high teens, pretty much risk free. That's a strong incentive. And I think that short attack fails. So what's the other variable that can drive his purchases back down to 5,000 a month? Well, it's the price of Bitcoin. So he's still going to be spending, $2.5 billion in a week on Bitcoin, but it's not going to buy, 30,000 or 25,000 or whatever amount of coins that he's hitting right now. So that's where I think it cut the bear market short. It's not as easily attacked from a fiat angle as selling, the MicroStrategy shares themselves. That's kind of where I came to that conclusion that Stretch is eating the bear market. They're gobbling up 30,000 coins in 1 week. There goes the bear market.
Yeah,
it's a great point. He seemed to know, Saylor had a recent, it might have been at the conference too. He seemed to know, or at least he seemed calm. I know he said things before that haven't exactly panned out like he thought they would, but maybe they are. I mean, I think that we're just sensitive to the time, especially over the last year and a half. It's been a bit of a roller coaster, and some of us, for different reasons, have kind of been a little bit more affected by that. But I feel like in the grand scheme of things, it's really, a year has gone by in the blink of an eye. But it does seem like that recent. He seems like he just knows stuff. He seems like he knows something. He seems like he's aware, and maybe it's because he's talking to maybe some of the deals that sprung from his campaign or whatever he shared when he went to visit with some of the big banks. He's got some of that stuff on deck, so he just knows that, like, hey, yeah, and he's also doing the math. I mean, you've been hearing about the strategy curve, right? And what that does to power law, and now you've got these other players that are going to be competing for the very limited supply. So it's not going to take very much time, I'd imagine, to really start to see that reflect in the dollar price. I just don't understand. And if it doesn't, then I really don't know anything about any of this stuff. Like, I'm completely like out, just going along for the ride, because I always thought supply and demand meant something, but it's at a certain point, it's got to actually start showing, the real number.
Yeah, Adam, I think I seen this before we started here. Did Saylor retweet on
He did, dude.
Twitter our fucking strategy on Robinhood? Like,
Yes.
so
Dude,
Saylor...
I was talking with Luke about this.
Oh, okay, yeah,
Luke,
go ahead.
this is
Tell the story.
the stretch play on margin. Like, if you got any buying power left and you feel healthy on your riskier investments, and you wanted to use up that buying power, just buy Stretch. Make the arbitrage between Robinhood's 5% and Saylor's 11.5%.
Wait a second. He did what?
Saylor retweeted this.
Who tweeted it in the first place?
I missed the retweet.
Oh, check the Misty channel.
Although all of this sounds amazing, Frogs N Frens is not financial advice.
So yeah, he's basically kind of retweeting like what we have been talking about the last couple months since we were able to start investing in Stretch on Robinhood.
Yeah, I see it
Damn,
now.
like, I mean, And Meta, I think
Okay,
you brought this up.
yeah. Can we just? I just want to do for the record.
Yeah.
I think this might have been my idea. However, I don't think it's a novel idea. I'm not something I deserve to be patted on the back for. But I started thinking about this like I don't know, maybe 6 months ago.
I think you did, dude. I think you originally brought it up.
And the is that this is before SATA hit the scene. Now SATA for however Robinhood figures out what they'll give you as available margin to buy a specific asset. I can put a lot more into SATA, but the spread is even wider with SATA, so
Yeah.
much more enticing. And then you got to layer in the Warsh effect if that's going to indeed
Yeah.
play a role
Oh
here.
man. Yeah.
I don't. I would describe the feeling as jubilation if this pans out right. But it is a really now the only thing I would say about this though, and it goes back to Luke, your point about shorting Stretch or SATA. The question I had heard somebody say the reason it's not viable to short either one of those is there's some mechanism. I don't. By the way, I really do not understand how this part works. If you are going to short those instruments, that you somehow have to account for the distribution. So it costs them at least that amount to short it. And then with the multiple or the every other week distribution, it gets even harder to do that, right? So it's even easier for them to track par. So I wasn't sure if Luke, if you knew anything about that or had heard anything about that, or if that maybe is the reason why they start to become even more and more resilient and more stable, moving into that paradigm.
Mm-hmm.
Yeah, I haven't been able to fully wrap my head around what a short attack on Stretch or SATA would look like, but um, you know, it just like I said, I've come to, let's say they get it down to 80. I mean, that to buy in there is such a gift for somebody. That
Yeah.
it's such a strong incentive. And they'll have to cover their shorts at some point. Um,
Oh,
so
it's such a good point. The incentive outweighs the short.
Yeah.
I just don't see how it could work long term. Now, for somebody like me who has used most of my margin and I put it in Stretch, like we're just talking about right now, that arbitrage, it could hurt if it goes down 20%. That could definitely hurt. I think the key, in that case, to have confidence is have some other way to inject cash into your account in that situation. But so far, it's staying within that range, 99 to 100. And anytime, Bitcoin takes a big dip, my account health, it goes down a little bit. I just sell a little bit of Stretch and, my account health is right back up. And, when you're using margin, in a Bitcoin portfolio, like what we discuss, you just have to have a way. Bitcoin's volatile, and you have to consider those 40-50% drawbacks, and you have to have a way to combat, to bring in cash into your portfolio. One tool that we've kind of discussed in the channel is Winter, and the nice thing about that is when Bitcoin's down, Winter's value is up. It's not a perfect hedge. It loses NAV over time, but on those days where Bitcoin might drop 15% in a day, Winter's up, and you can sell that to bring cash into your portfolio and not risk getting margin called.
Mm-hmm.
Yeah. Yep. And back to the arbitrage point and like just the incentive, like whenever I see SATA or Stretch, well, specifically like at this point here now, since Stretch doesn't move much anymore, like SATA, like whenever that's down in like 97, 96, I'm like pushing everything I can into that. And then that's what I did a couple weeks ago. Like when it was down to like 97.50 before they started going back up here to 100. I was like, I'm putting like 10 grand into this right now. And because I don't want my margin just sitting there doing nothing either. Uh,
Mhm.
that's the other point. But like, I gain $3 worth to rotate out into other things of capital gains and such like that. And it's just a safe way to deploy your excess margin that you're not gaining anything from, and it's just an easier way to rotate. And you whether you hold for that dividend, because I'm not even going to make the ex dividend date tomorrow because I don't have nothing left because I rotated it and it's been 100 the last week now for SATA. So yeah, I'm with you. I think that's now Meta. You did bring up. I want to bring this up. Now this is possibly a negative. Uh, is there going to be a point to where brokerages are like, this is you cannot invest in
Mm.
SATA or stretch with margin like this?
You know, it's a great question. I've been thinking about that, and here's where I am right now. It doesn't mean I won't change my take on this. I think for them, it's irrelevant, meaning they're making money on you taking margin one way or the other, and they
Mhm.
have zero risk in the game. You're taking all the risk. Whether or not they see something like SATA or STRC as a risk is reflected in the maintenance, meaning you can't get too far over
Yep.
your skis because they're controlling that with the maintenance mechanism. I believe that what's going to happen is there's going to be a scoring of those from a credit perspective. Those instruments, they're going to start to become looked at more as bonds, or like a weaker an SGov would be looked at, and then we're going to be in a different sort of world, because if we're figuring this stuff out, and there's people actually completely not in our conversations. Now, there are people that are looking at this, and I guarantee there are people that are doing it at scale. There's just too much money on the table to leave.
Mhm.
I
Right?
would say that Robinhood is actually incentivized because they get to
Yes.
deploy more capital at 5%.
They
Simple as
also
that.
end up with more assets being managed
Yep.
on their platform, um, right? Because that we are the ones taking the actual risk. They don't have any risk. They're making risk-free, uh, you know, interest.
Mhm.
So, but like, imagine doing it with like 10 million or something like
Oh
that. I'm
man.
not saying
Yeah.
but you know what I'm saying? Like, you're talking about some real working capital at that point. You could run. And the other thing too is, like, I don't, ultimately all that's going to do is move more money into Bitcoin. That's the
Yeah.
really mind blowing part. Because who cares what if it at a certain point it's like, what if Bitcoin crashes? Like, what if it can't crash?
Yeah.
What if it literally
Exactly.
can't crash anymore because there's just too much capital coming in through these derivatives that are built on top of it? I don't know how that would work just from an engineering perspective.
That brings up a good point. Originally, when MicroStrategy was releasing these preferred equities, my original thought was this isn't really for Bitcoiners. It's more to draw in those pools or drawing capital from the different pools out there. But with Stretch, my thought has changed on that because let's take the example of I think was it Ryan's or Meta's friend that is saving up for a home and they have $50,000 cash. Well, you don't want to put that in Bitcoin. It's too volatile,
Mhm.
because then when you find the house you want and Bitcoin is, down 40%, then you don't have your down payment. So obviously, you're not going to do that. You're not going to put it in MicroStrategy. That's even more volatile. But you might put it in Stretch and gain 11.5% on that 50 grand for this period where you're shopping for a house, and meanwhile it's still in the Bitcoin ecosystem. So sometimes I feel bad holding cash because I want all my energy building up the Bitcoin ecosystem. Now I don't have to feel that guilt. I put it in Stretch. I know Sailors
Mhm.
being a good steward of my money and buying Bitcoin with it. And meanwhile, I don't have to worry about when I need those funds if Bitcoin's going to be down 30 or 40%. So I
Yeah.
think it is
Yeah.
for Bitcoiners.
Good point. And
Oh no, I think it is
ahead.
too. I think we could. This would be a great segue, by the way, into the whole margin discussion because I think it's all part of the same conversation. Ultimately, the reason why you would do that is you don't want to risk the loss of purchasing power in those downswings when it comes to Bitcoin. You have to find that kind of balance of how much capital do you want to have. But I actually think that you can fill some of that void with available margin, right? Like, why have an emergency fund when you have, say, you have 150 or $200,000 of margin available to you? Like, do you really need $20,000 sitting in a high yield savings account or whatever? And then the question becomes like, how long do you want it? So I feel like this whole discussion is really around like, no, I'm a maxi, and I want to stay a maxi, but the problem is like if you have everything in Bitcoin, you can just do things like reverse dollar cost average. You can take like an allowance out of it. You can like, you can sell more aggressively when the market's, at all time highs versus, but you're playing the game. You're trading, right? And it never felt right, but I think that's why stretch makes, to me, it makes more sense. But you don't want to have too much in stretch, right? Because then you're giving up all that potential upside in terms of purchasing power over the longer term,
Right.
which I think is only going to get shorter and shorter as the whole deflation things. Like, that's another nuance of this conversation is we have two things that are kind of like amplifying this ability, purchasing power of energy stored in Bitcoin, and that is dropping prices and lower costs of just life, and the increasing purchasing power of non-correlated assets.
Now, when do we get though these maintenances to go down on these two preferreds specifically? I actually all of the preferreds, honestly, from strategy and then Zeta, like that opens up. What if Robinhood? What's the stoppage here with Robinhood having like stretch and Zeta at 50% maintenance? Like once that goes down to 25, I would imagine like you just have that much more then to
Yes,
deploy and just to make that flywheel even faster and bigger.
I think it increases the size. The more liquidity makes it even more resilient. But to answer your question, I think that's whenever, and it doesn't necessarily mean they're all going to happen at the same time. I think it's whenever a strategy is looked at, and it doesn't, it's not rated like a junk bond. It's rated like, a treasury because it's performing better, that it's more
Yeah,
stable.
it's the safest, but by the Sharpe ratio, it's the safest
Yeah.
thing ever. I
Yeah,
guess you could argue after the first year, maybe.
yeah, potentially, because it doesn't make sense that Misty, that's subject to NAV erosion, is at 35%, and
Yeah.
Stretch, which
Right.
It doesn't
yeah,
make
doesn't make
sense.
sense.
Yeah. Now, all right. So yeah, we'll jump into the margin in full here. So we kind of figure out the last year plus that margin is using margin is a life changer for everyone if they know how to use it properly. So first and foremost, with margin, like in Robinhood anyway, you put $1 in, you get $3 worth. That pretty much like it's like a more or less a loan at 5%, or obviously if you borrow more than 50K, then it drops down to what 4.5, and then it has different tiers like that. The more you borrow, the better the deal. But Adam, can you tell us the margin, the actual margin formula for the maintenance that you kind of told us behind the scenes last week that you found out?
Yeah. So I guess to give you a kind of a backstory of why I figured this out
Yeah,
was
please.
because I was heavy in Misty. Actually, the only thing I owned was Misty. And so that maintenance is 35%. So if I buy $10,000 of Misty, I have to hold $3,500 in account value in my account. Well, when Misty started losing 60 to 70% value, all of a sudden they switched the maintenance from 35% to 70%. And now I was getting close to a margin calls type of situation. So that immediately made me give me a sense of urgency to kind of balance out the portfolio. So I need something.
Adam, did that mean you needed to keep that the value of the whole portfolio? You're just using 10,000 examples. Does that mean it went from it had to be a value of $3,500 to then it needed to be a value of $7,000?
That's correct. Yeah.
Okay.
Yeah. So it switched on the fly. So it's because I only had one asset.
Yeah.
And they had nothing else to draw from. So they figure, okay, well, since this equity dropped so much, you know, we're at a point where we're going to have to either collect
What
or you're
when
going to
did it
have to put
happen?
some more money in.
When
This
did the
was
what was the value when they raised it to 70%? And the follow-up question is, were you already past 70%? In other words, did they make the margin call possible by raising the maintenance?
Oh, you know, well, so I bought MicroStrategy so I bought MicroStrategy on margin at the time. So my only
Oh,
account value technically was Misty. So I used margin to then buy MicroStrategy. Well, MicroStrategy tanked as well.
mhm.
So all of a sudden they switched the maintenance on me. So I'm like, okay, well, I'm gonna have to balance out a little bit outside of a Bitcoin portfolio. So then if you start looking at like I just didn't really understand margin at all. And I didn't understand how they could all of a sudden just switch it over. So then I just started looking at, okay, well, in IBIT play. So if you buy IBIT, they only require 25% of IBIT. So you buy $10,000 of IBIT, you only need $2,500 in your account value. So the lower the maintenance means the more you can buy. But even though like Strike is 50%, you buying Strike will never raise your buying power. But MicroStrategy will, because MicroStrategy can go up in value, but Strike won't because it's sitting at par. It's never really growing in value, so you're not getting that extra or stretch. I don't know why I call it Strike all the time. So you're not getting that extra dollar to then triple in margin availability. So I was trying to play that side, but what I realized to be safe on the margin side is you need to pick stocks that that you feel comfortable with, that are either Bitcoin adjacent or and what I mean by Bitcoin adjacent is something like in semiconductors or things like that, that can help balance out your portfolio, but also have a lower maintenance because you can buy more without pushing your maintenance threshold. So a lot of us, we talk about, you know, kind of straddling the line of 50%. Like I would I like, in other words, I wouldn't use my maintenance up to 50% for strike or for a stretch. I wouldn't use it for a stretch. I would use stretch after the 50% threshold. So if I'm at 50% with my more riskier bets, anything over 50%, I would be buying stretch.
Mhm.
And still
That makes
that's
sense.
only adding. So if you let's say you have $100,000 in stretch, that's only adding 50,000 to your maintenance that you need to hold. So
Yeah.
again, so your maintenance may move from 50% to 75%, but you're still really safe. To Luke's point, like if you start having your riskier portfolio start losing value at the time, and you're getting close to being called, well, then you just sell strike or stretch and not lose anything because you're at par regardless.
Yeah. You're just losing whatever the near-term potential distribution is, and it just depends on when you sell it, right? You could make sure that you're going to have even less chance of losing out on that because they're going to have more frequent distributions.
Oh, that's a good,
So
yeah, right. The semi, what are you, twice a
Yeah,
month?
semi-weekly.
yeah,
Yeah,
biweekly. Um, that's good stuff. And then, of course, I imagine you can also interchange stretch with SATA as well in that
correct.
equation. In fact, it
Correct.
might even but I've noticed something, Adam, and I don't know if you can go and look in your portfolio and see the same effect. I have more available margin for SATA because I'm already holding a chunk of stretch.
Oh, interesting.
Right. So it does look at the whole the composition of the whole portfolio, which is what I was always trying to explain to G, and he hilariously just calls people faggots when you talk about this stuff, which is like totally. Listen, I understand this is all fiat. The whole thing has to be prefaced with like we're playing the fiat game here, right?
Yeah.
But if you're gonna play the game, you should do it right. You should do it properly, and
Yeah.
you should do it you should do it in a way where you're not just like, oh shit, I got margin called again because you're overweighted in one particular area. That's the whole reason for diversification. I
Right.
understand the arguments against diversification, and this all comes back to, if you're a maxi, you're probably already some huge percentage in spot Bitcoin anyway. Just make that
100%.
assumption. So this is all just like, this is a mechanism that is really being used, I think, for a lot of us to just pay the bills and to just
Yep.
kind of give us a lifestyle, essentially.
Well, Meta. So I want to give you a strategy that I've been thinking about. I haven't implemented yet, but so I'll give you a scenario here. So $100,000 of cash into an account, right, gives me 300,000 in buying power. So that 100,000 is already out to assets that are, let's say, riskier than stretch. Then you take of your $200,000 buying power, you buy $100,000 worth of stretch. Now that dividend is 11.5%. So the original risk, my first 50%, my first cash portfolio, right, is at 5% of Robinhood maintenance. So stretch not only covers that original 5%, but it also covers the 5% to hold stretch in the first place. And then you're making an extra 1.5% on top. So theoretically, you're borrowing for nothing.
Mm-hmm.
Yeah.
Like zero cost, actually getting paid to borrow.
I view margin plays as like a mini Sailor. We're kind of we're taking Sailor's playbook of using the fiat rails, using the fiat tools that are available, and deploying them to buy more Bitcoin. I forget who posted it in the chat maybe last week about the horses and the railroad. Basically the concept was, when the railroad came about, obviously horses were still the main form of transportation. Sorry. And the rail network hasn't been built yet, but you still want to invest in it, because once it is, there and ready, you can get so much more work done with a locomotive than a horse. So kind of the premise was, if you are seeing that future coming, you're deploying your horses to build the network of the locomotive, to build the railroad tracks and build that network up. So that way, when that transition happens, you're ahead of the game. It's not a perfect analogy, but that's kind of the way I see this, is like, yeah, most people are still using fiat money, and there's all these kind of fiat tools available, these Binance tools, these debt-based tools. Well, we can deploy those tools to build up our network, our Bitcoin network. And that's kind of what Sailor's doing. That's kind of the way I see it, is just like a copycat of Sailor's play. Let's take these tools that are available to us and deploy them to our advantage, because we do see this new world that's coming, and we do see it as an unstoppable force that's coming. There's, in my eyes, the chance of Bitcoin failing is so minimal that I don't consider that in my risk profile when I'm making these decisions. So that's kind of the way I see it. We have this opportunity. We're kind of the early ones seeing this transition. We have the conviction. We talk about the Q plan playing in with Satoshi. The overlap there, and we're kind of very few people in the world that kind of see this whole picture coming together. So we're just trying to use that asymmetric information that we've acquired and then also the kind of old system tools that are available. We're trying to take advantage of that and better our place, our position in the new world, in the Bitcoin world.
Yeah, that's a great point to bring that analogy up.
And I do gotta drop off here, guys, but I had a great time chatting with you, and I think that we're winning so much. That's why all the trolls are out on Twitter right now. They always come out during the Bitcoin conference because they know, they want to dampen that signal. They want to distort that signal. But we're winning, and it's unstoppable. So, let's keep doing this and keep talking through this revolution together and sharing our ideas and coming out better on the other side.
Hell yeah,
Awesome.
bro. Thanks for coming on. Coming to our side of the pond here, and I hope to see you next week. All right.
Yeah, it's been great.
Real
Yeah.
quick.
Go ahead. Yeah. No. Go ahead, Meta.
Luke knocked something loose, and then I went back and I looked at the Sailor reposting this. Think about what he's actually doing. He's amplifying. He wants people to do this.
100%.
Yes.
It's free money, and it drives more money into Bitcoin through Stretch.
100%.
I feel better about doing that strategy now, actually, because I'm
I do
still
too,
leery about it. I'm like,
I just thought it's too good to be true, right? Like, because we're programmed to think that, and that's what a lot of people say about Bitcoin too. It's like, oh, it's too good to be true. It's like, nah, maybe not.
you feel like you're walking into a bear trap or something.
Well, and the thing is like, if you're gonna fail, like if something happened to STRC, like I think you could even set up like some type of an insurance policy with you know cells, automated cells, if it drops to certain price points. They're when I initially presented it or mentioned it to Krash back, and I was actually talking to you and Francis about it, I think.
Yeah.
But that whole thing was like, all right, the risk here is that STRC drops or detaches from par and drops to some of its all-time lows. Even then, it's still just unless it forces a margin call, it's very unlikely like the chances for Stretch to go all the way down to like $75, I think, are so low. And I'm just speculating, obviously, when I say that, but based on what I know or I think I know about it, it seems very unlikely because there's so much liquidity in it and there's so much demand for it, right?
And there's so much collateral behind it.
Right. There's just so it's becoming the thing that we think it's going to become, or that it's going to be. It's going to be on par with something that's even safer than a short-term treasury or a bond. And so that whole idea of selling, it's like you could do that as like another layer of defense, but you could almost look at Stretch as the defense, because you could just simply, like every one of us, you could just actively manage your portfolio. So you wake up in the morning and it's like, if things look a little scary, you sell off a chunk of Stretch and you wait and see what happens in a couple of days.
Just give yourself some breathing. Yeah, just give yourself some breathing room.
Didn't Sailor create a bomb-proof mechanism there too? Like where the value of Stretch goes down, doesn't he increase the payouts to encourage more people to buy back in?
Yeah, that's right.
So that's right. If it's happening every 2 weeks, I mean, I can't see this thing going down. Like I can't see it being volatile at all. I mean, really, in reality, I mean, we just went through a huge bear market with billions of dollars went through it and went the 1 penny volatility he was bragging about, right? So, but I mean, then if it's every 2 weeks, I mean, you're getting a payout. I mean, if it starts going down, I mean, everybody's going to buy in at the buying opportunity, and he's going to pay out a bigger dividend for that. So, I mean, I can't see it dropping down for more than a few hours, if anything, to tell you the truth. I mean,
because I've seen like some speculation that they are going to bump it up again because we've been sitting just under 100 here for an extended period of time. I don't know. We'll see, but
yeah, I would imagine I'm expecting to see that Meta. And yeah, the collateral thing, that's a big deal, especially with Sailor still buying like every week. Like that just adds to the collateral. Cause like when it initially came out, Stretch, pretty much all the preferreds, I think for the most part, they were all at least 4 times collateral to what the stock's worth and what you would put up. So like 5 times Bitcoin would have to be like at the time below like 30 grand just to be like 1-to-1. Like, and that's still 1-to-1. Like that's still better than a lot of other shitty bonds and anything else. So like Meta, I keep saying this. I don't think we're ever gonna see Stretch below like 97 ever again. Something literally has to happen. The strategy itself, I think. I don't think it has anything to do with Bitcoin anymore. I think it's going to be something that literally has to
Yeah.
happen in strategy to something like that to happen. That's especially if we're only moving with the Sharpe ratio, like moving only at most a couple pennies during the most volatile times.
Well,
Ryan,
and the
to your
thing
point,
is like, what? Go ahead. I'm sorry.
sorry, real quick, Ryan, to your point though, them bumping the rate, let's say they bump it to 12%. SATA's already at 13. So Krash, what I was thinking is like the fight is on for who pays the most.
Yeah.
And then with Warshin, interest rates to borrow money go down. So your
Yes.
spread, your arbitrage spread is just going to keep growing.
Well, and let me throw this at you. At that point, I'm not even looking at stretch. I'm looking at stride. I'm looking at strike. I'm looking at the other
That's a
birds.
good point.
Because
That's a
like
good point.
stride right now is an effective yield of like 13 or well, it is up to 76, I think, today. So it's probably around like a 12% effective yield. But that is you're going to be getting that because that's it's a 10% all year uh annual dividend. So like he's not changing that to the downside like he could with stretch, like say like we in the bear market or whatever and like they're just like they have to ATM or like you have to deter people from buying so much, to keep the price there at par.
Man,
I think you guys are sweating that
imagine
too
if we,
much though, because he's at 800,000+ coins. He's going to 1 million. Then he said he's going to slow down. I mean, slowing down means he's just going to have way more cash laying around if he's not buying up Bitcoin every damn week. You know what I mean? So I think everybody's fearing this. I don't even think there's any FUD in this. To tell you the truth, I mean, obviously there's always a chance, but I think it's a bomb-proof place for older people to just park their money, get a dividend every month from it, and and just live.
Yeah.
You know what I mean? And for everybody, not just old people, but I mean, like, for your guys' margin as well. Like, I don't think you have anything to worry about going on. If you could have a 5% maintenance on it, I don't think you're going to see that. Like you said, $97 at the worst, maybe. And then it's just going to get returned around real quick with every, the biweekly dividends and then increasing the rate. So, yeah.
Yeah, I agree with you 100%. I just feel like the value though, like if you're getting around the same amount of dividend per year with stride, but you're also getting 25, you're able to buy an extra third of stride right now compared to stretch and you're roughly getting the same dividend.
Hey, Krash.
Yeah.
Let me challenge you on these other preferreds.
All right.
If you've got stretch, right, then why wouldn't you just create your own version of the preferreds by allocating some percentage to spot Bitcoin or, if you want IBIT or BTCI, if you want to stay in that sort of margin paradigm,
or even IBIT or
dude,
the common.
Yeah. Meta. This is literally what I was going to say. Like, who is the next treasury company that's going to build their next SATA stretch? It's got to be coming like probably within the next month or two.
Well, I would think so. I think MetaPlanet's coming with.
Yeah, I was going to say Mars is MetaPlanet,
right?
Like Meta said.
Yeah, and then 21's likely going to have to compete.
Yeah.
So now you've got. So let's say you've got 5 competing against each other. The only way they compete is number one is the volatility, right? So if everyone can keep it pretty steady, then the only other area to compete is on rate we're paying out. And then if their assumption of CAGR is 30%, how far are they willing to compete up and pay out?
Yeah,
20%.
And then you have to start to think about the natural, how low are we going to go with interest rates as we kind of transition into this new system? Because at a certain point, you're gonna have this, right? You're gonna have this market competition for yield, driven by obviously flow, and they're all competing for a massive pile of liquidity. Like, what is it? It's over 100 trillion.
100 trillion. That's right.
So we're opening up. It's like a bandwidth problem for the liquidity, right? So all of these vehicles, it starts to kind of break my brain a little bit when I think about this, because I can see a future where you really you're literally using collateralized margin debt to give yourself an income for free. It is kind of like UBI. I mean, It's
Mhm.
It's
basically
100% a UBI.
but it's obviously like, we could do it today. Like we could all start doing this right now based on our available margin. We could go in and buy some portion of SATA, some portion of stretch, maximize it, give ourselves a little bit of breathing room, and we could start literally making money on Robinhood's money. And as those two numbers, the yield rate and the margin rate, sort of go in opposite directions, we literally are getting like real time raises essentially on
Raises.
our income.
Yeah, that's right. Yeah.
Mm-hmm. Yeah. It's fucking A.
I mean, like, I don't mean to shit talk myself here, but it sounds so retarded it might work. Like and the thing is like, if
Dude,
Sailor,
it sounds so good to be true that you just don't want to step on it. It's like, what the fuck? Is this real?
Yeah.
and then what am I going to say? Sailor told me to do it. What do you mean he told you to do it? Well, I saw he retweeted somebody who said to do it. It's like, oh,
I mean, I
man.
guess that's the first mover advantage, though. Like every first mover in anything had these thoughts. Like had these like, what if I am just retarded and this ain't gonna work? So I mean, yeah, it sounds strange because we've never seen this before in this, certainly in the Bitcoin space. But like, I think you could argue that for everything that's brand new.
Well, I think Luke's already doing this. I think that per our
Yeah.
conversation and the thread, he's already doing it. So he says he's stretching his margin out to like 99%.
Yeah.
The,
Well, not yeah.
the only thing to be mindful of is if he's actually actively selling off his STRC position, for anybody that is kind of doing things by the book, those are,
Taxable.
yeah, they are. And they, I believe they're looked at, and you're going to obviously want to talk to whoever it is if you do that sort of thing. But I believe they're short term. So
Yeah.
I always like
But I think that
yeah.
I think that only affects the dividend payout though. It won't affect because you don't really have any capital
Right.
gain
No,
there. Yeah, it's just
the way it works
dividend.
is you take the amount of the distributions on per share, and and it would have to be above whatever your income bracket is, and then that you would pay the whatever it is, the 40% rate on that amount if you were, again, this is all, if the problem with all this stuff too is Robinhood sending that to the bakery one way or the other, right? So if you are in the Robinhood system and you're doing these sorts of things, then there is a 1099 being sent.
Yes.
Whether or not you want to do anything with it, whatever, that's up to you. But I just like to tell people,
Mm-hmm.
what the potential pitfalls are if you're playing that game.
Right. Yeah.
Well, that won't mess with any Canadians in their TFSA, luckily. So I guess we could deploy that strategy. But
It sounds ideal for that kind of an account, for that kind of a setup.
Mm-hmm.
Yeah.
Do you guys with your regular ETFs, like do you guys get some kind of IRS or like ROC 15% hit on those or something? Like the distributions?
For
like
return of capital?
Like your weekly distributions, you get taxed by the IRS
Oh.
before you even see it? No?
We just have a 1099. Well, we get a 1099. They're not taking anything out, and then it's up to you to file, and you can decide whatever you want to do. It doesn't mean you have to. Basically they're reporting your income, and that's the beautiful thing about return of capital is it reduces what would be looked at as your actual, above and beyond.
Until the shares
in Canada, they actually the IRS taxes us 15% before we even get the distribution.
Of course they do.
Of course they do. So IRS hits us Canadians even before, even though for a change, our Canadian government isn't taxing us. But so I can't wait till Trump gets rid of that shit too. So that'd be good. Yeah.
Yeah. Now, I would say to the point of taking out margin with stretch and SATA and such, like almost to the limit. I don't know. I mean, I never ran this like simulation or whatever with Grok or anything, but like I have a hard time believing if you have SATA and stretch over like say 50% of your portfolio, I don't know how you can get even close to a margin call. I don't know if.
Yeah, that's a great point, Krash. I think the more composition is made up of less volatile assets, the chances of being, you'll probably like, I'm actually curious to do it to know how the math's going to work, but I don't think it'll fluctuate much.
No,
If you
unless
have, yeah,
yeah, unless you have Bitcoin drop another 50% from here or something, then you might have a little bit. I don't even think that would even come
yeah,
that
no, but
close to a call, I would say. I mean,
think about it
it
like
would get
this.
kind of, in the red maybe for you, like maybe under 20% maybe. But like I don't know. I think you would still have some room to play.
Let's say you had a portfolio that was like mostly made up of say BTCI and Misty and MSTR, okay, or IBIT, Misty and
Okay.
MSTR. Obviously, those things are all connected, right? But then you added, uh, let's say another, let's say it's $100,000 of those three, and it's $50,000 of STRC,
Hmm.
and then you added, because you have all that collateral, you added on margin another $100,000 split between SATA and STRC.
Yeah.
You've just made the amount that your portfolio can go down. Now you've taken it from something that is volatile to now the chance. You like if you were going to see a 10% swing, it's diminished by whatever that percentage is
Yeah,
in the
your
stable part, right?
ratio,
Right.
your
Yeah.
your your half or less than half at that point of the ratio, the volatile ratio isn't going to move it nearly as much as what I think what you were trying to say, right?
Yes,
Okay.
exactly.
Yep.
Right, right.
Yep.
You're not going to see, like, let's say you're sitting between 40 and 30, right? Like you might fluctuate between like 35 and 40,
Yeah.
like that's it. But that's the thing, is like, what would it take to move you down to the point where it was actually dangerous? And the question is how much do you have to have on margin of SATA and STRC to make it impossible for you to get margin called?
Yeah.
Unless there's something serious that breaks and those both crash, right?
Hmm.
Um, and I think there's an answer to that. I don't know what it is, because I think it goes back to Adam's math on the way the margin maintenance works. Because like I think I told you guys this last week. So my brother, he put like 14 grand in Robinhood, and he initially bought all STRC, and he wanted to do withdrawable margin, but they wouldn't let him, because they basically said, you're overexposed to STRC. So then what he did was he just said, screw it, I said, well, why don't you try selling that and buy SGov, or sorry, wheat,
Hmm.
and then take out what you want, because he wanted to take some and pay it on a credit card, and then buy the rest, buy STRC. So he basically went from only having STRC to then he bought weak. He got the cash out that he wanted, and he ended up buying half as much STRC as he could with just a straight purchase,
Hmm.
because he bought the week first.
Yeah. Yeah, that's crazy.
So it does matter how you, like, the order you do these things in. So the point is you have this
Well,
marginable
that
asset.
was why
Yeah.
the more risky assets, use your first 50% up on those, and then go your safe route.
Mm-hmm.
Okay. Interesting. And that's we're just talking even about margin within the portfolio itself. Meta, I know, and Adam, you guys kind of use margin outside of the portfolio. You kind of want to touch on that as to why that's so life changing as well.
I I just had a month where I had a shortfall in my budget, um, and I had to lean more on margin, and I increased my margin balance by about whatever the shortfall was. We'll just say it's $1,000 for round numbers,
Hmm.
and that adds what to my monthly payment? that Robinhood automatically adds to margin?
What, $5 if that or something?
Yeah, not even. And so the point is like, I was short of $1,000, which is kind of a big deal by a lot of people's standards, and it made literally no difference to me. I kept trucking, like, and I might fall a little bit behind next month, and I know it could snowball, but of course the overarching bet is always on the underlying assets in the portfolio exceeding that shortfall in the near term, because in the mid to long term, I know it's going higher.
Right. Yeah.
So,
Right.
but that is a huge, because most people, they budget based on, they put the money in a savings account, and then they spend it from it. And then if they run out of money, they either carry like a credit card an extra month, so they're paying like a premium on the interest, or they simply go without, right? Whereas this approach, all margins ever do is it's smoothing out your withdrawals, right? Because it comes down to you have inflows and outflows, or income and outcome, and you could basically, boil it down to, as long as uh, you're not, you can go through periods of shortfalls and it's no problem. And this is how a lot of businesses run this way too.
Yeah.
Yeah.
But you're never changing your quality of life, right? And if an emergency came up, right, that could add a little bit more. But as long as your margin maintenance is healthy, and
Your
that's the
assets
other
keep
thing too,
going up.
right? If we go back to what we were just talking about, this makes it more likely that you will overcome that shortfall because you'll have more distributions coming in and you just basically have to subtract whatever the interest rate is. So it's going to add that much more every month because, obviously if you want to add $100,000, it's adding 5,000 or 4.5 thousand a year divided by
Hmm.
12 to the minimum interest payment. But that's not shit because you're basically making, 7,000 on top of that. So you're getting that extra, whatever it is, $600 a month
Yeah.
for free, which you can
Yeah.
just let it sit. So once you get to a point where you don't have a shortfall, that's when margin starts to reverse, meaning you're pacing the income is actually outpacing the outflow, and that just means your margin is going to shrink.
Yeah. Yeah. And the margin potential grows,
Exactly.
yeah, yeah. And I think that's why we all kind of like, you could do this, like even just like normal people that figured out this game does this with just normal assets, like even that don't have cash flow. Like that strategy still works, but it's kind of even harder to think about. But like I think that's why we like really gravitate towards these dividends too, because that kind of feels like it throws fuel onto that fire on as far as the potential. Because every dollar, like we said, whether you deposit it or the dividend comes in, your income funds deposit it basically into your account. You get 3 times whatever that dividend was back into your account.
Yep.
So yeah, I say, I mean, that's kind of why we gravitate towards these income funds. Then I would say,
Yeah, and speaking to the the whole reason why you would want to hold something like an alt, and I'm not saying alt is the thing, right? Like the
Mhm.
idea of diversification. We were talking about this last week, Crash, and you guys are kind of experimenting with Chippy and some of these. They're essentially bets on these other funds, and that adds diversification. And of course, you have the potential upside, and you've got the distributions. So there's a lot of value there. But if you wanted to boil it down to why I think you could basically do all of those things, like less is more, is you've got the stability with SATA, STRC, and any other incoming, sort of digital credit instruments. And then you have the upside with the Bitcoin proxies, and eventually, I think Robinhood's going to allow spot Bitcoin to allow you, to take margin. It'll be marginable. I think that's coming
Mhm.
probably sooner than we think. But if you didn't do that and you wanted to hold something like BTCI, the only reason you would hold BTCI over something like IBIT is you're willing to give up some of that upside because maybe you have enough spot Bitcoin outside of your portfolio. So you're really just trying to maximize margin maintenance and margin optimization, and you're willing to give some of that upside up to take that money out of the system today for whatever your expenses are to support your lifestyle.
Yeah.
So the
Okay.
question is, why would you need to stray from the Bitcoin thesis in order to speculate on the stocks? Because I think my problem with the stock market is what we've just been through for the last year and a half, right? None of the things that happened were supposed to happen. There's so much that's outside of our control. It's kind of like you already have the near-term risk of fluctuation in the Bitcoin price. Why would you want to expose yourself to this other? And it's all again measured in fiat, so that's all bullshit, really, at the end of the day. But you're ultimately doing it for the same reasons at the end of the day, too,
Yeah.
right? You're ultimately looking to expand your purchasing power. So, and
So
it's a cognitive load too. So those are my arguments against why you would do it. But
okay.
you probably won't get an argument out of me as to why you should do it, because I do think a lot of that stuff. But you do have to pick winners and losers when it comes to, companies. They have a
Yeah.
lot of risk
Outside
baked in,
outside of
right?
Bitcoin. Yeah.
Exactly.
Yeah, so I mean, we could. I do have a theory here for the margin, but I do want to touch on this here while Adam's still here. The chippy counter argument that we were kind of talking about last week after hours meta, and that where you were like, yeah, please, can you kind of like rephrase like how you thought about like when I said, are you interested in chippy or like or just the AI in general, and kind of can you kind of like tell us what your counter argument to why you don't want chippy?
Yeah, I just don't want to pick winners and losers. I'm not arguing that AI isn't going to dominate. I just don't know how, and I don't know what that means ultimately for the value of that. I think Misty pretty much sums up why I wouldn't participate in or put over allocate or allocate anything to Chippy, because I also feel like why are you doing it?
Hmm.
Right? What's the motive behind it? I mean, we all want to see prices go up on different assets, but at the end of the day, we all believe that Bitcoin's going to swallow everything,
Yeah.
right? At a certain point, I think everything we focus on at our level is going to be like laughable, right? It's going to be like
Yeah.
you add a couple of zeros onto the Bitcoin price, and it's like none of this shit matters.
Hmm.
And at the end of the day, I feel like any additional funds I have outside of my operating expenses and my lifestyle, it should all be in a Bitcoin proxy or directly into spot Bitcoin. And that's after I have gotten my lifestyle at the level I want it. So that's kind of in my head the way I kind of wrap the logic around it. So the counter to that argument would be like, yeah, why wouldn't where what have I got wrong, and why would Chippy enhance what I just said, or would it help me?
Hmm. And so for anyone that's not familiar with Chippy, it is the yield max semiconductor ETF. So what you said though last week really brought this question to the forefront for me. And when you said like if we think AI is gonna bring everything down in price, why wouldn't that count for the semis either, like for the chips as
Exactly.
such? And that kind of like I stuck with that all week, and that's why I want to kind of
Yeah.
talk about this because like generally I think I agree with that, but I think during this transition time, no, I think that's where I think you're like a little too far ahead with that statement
Hmm. Hmm.
than say like yeah okay maybe in like 5 years or something like when we actually start to really can see the deflation coming, then maybe that's the time to really like not keep buying chippy or to get out of it whatever, because obviously that comes to your point that you just said then too is like everything will go back into Bitcoin. So like that, why do you even want to play around with this? So I get that. I understand like your side of it and I get it. But I think that's more 5+ years down the road and not this now to 4 years, window.
Well, based on what we just talked about, let me counter your counter real quick. But based on what we just talked about with and this idea that July and knowing what Sailor's doing and knowing what SATA's, what Strive is doing and
Yep.
knowing what's coming with 21 and the other company, do you really think it's going to be 5 years?
For deflation or for what the Bitcoin run or what
Well, let me.
Right,
exactly?
right.
All right.
Imagine Bitcoin does it times three.
I mean I'm not I can't argue that either. Like I don't know if I can see semis going 3 times or doing more than Bitcoin within a 5+ years. Now, are we? I know what you're saying with the
So
stretches. I
this
get
is
it.
it.
Yeah, please, Adam, go.
Yeah, let me jump in on this just slightly. So it's a matter of allocating of dollars, right? So
Hmm.
am I going to get bigger bang for my dollar, even though I'm going to suffer in the short term if I just put it in Bitcoin? The answer is probably yes. But we also went through a 50% drawdown, and we're
Hmm.
trying to build portfolios to live off of so that we don't sell Bitcoin. So I'm looking at it more like that. Like this is temporary. This is a transition. So I think AI, semiconductors, and Bitcoin all go hand in hand, no matter what. So even though, let's say, deflation hits, you're still going to need more and more and more and more. Deflation just means that, hey, we've become more efficient at building these semiconductors, more efficient at building GPUs. But that doesn't mean the demand goes away. The demand is just going to get stronger and stronger, and this is just going to allow access to people to have access to it that they didn't have access before. I mean, as we start winding down on mining the rest of the Bitcoin, which is still 115 years away, 150 years away.
Yeah.
It's just going to be more and more compute power to do that. So
Mhm.
I think the deflation doesn't really matter when you have the demand. So in other words, from a company's perspective, running companies like, hey, the more customers I have, the more money I make. But also, like, let's say if I can drop my prices to maintain more customers, that doesn't mean I'm losing profit as a company. I've got a larger market segment now, and I can offer it at lower prices. That doesn't really mean that my company's value goes down. So my investment in Chippy, the holdings, doesn't really mean that because of deflation, the value of those companies are going to go down.
Right. Yeah, I think that very well thought through, Adam, and I wouldn't challenge any of that. Honestly, all I would say is, and you kind of started by saying it's really about now,
Yeah, it's
and
just now. Yeah.
the income and the distributions that are associated with it, and the near term potential upside. I'm
But I
saying,
also want to agree with you too that I don't want to pick winners or losers either. I mean, that's why I
right.
kind of almost outsource, like I outsource options trading to Misty on MicroStrategy because I
Yep.
don't know how to, I don't even want to be messing with that. And then
Yeah.
Chippy, I outsourced them picking the semiconductor world because I'm not read in enough. And the only other company I really even research is Tesla. Other than that, man, there's no way I'm picking any companies. I like Robinhood, but I don't know enough about it. It seems to be getting
It,
beat up,
oh
which
yeah,
is surprising to me. Like,
and I would
why?
say what everything we just talked about earlier in this discussion, if you have Robinhood acting as the best option to borrow on margin to buy these things, and more people become hip to it, what does that look like for Robinhood's
Yeah,
stock
right.
price, right? So
It's
there's a
got to be
play there,
huge.
but for the record, just like I did with Alti, you were right. And just like I did, and I'm doing now with Robinhood, I got wrecked personally on Robinhood in the last 6 months. Wrecked. Okay. Now that
Mm.
said, that's fine. If I walk away from it and I didn't learn anything and I move to the next speculative bet, then I think I'm truly retarded. Not the good retarded either.
Yeah, that's
Um,
not the good retarded.
what have I learned from speculating on things like Misty and then Alti for now I learned how to use margin, so I got something out of it. And I didn't quite lose because I didn't really sell. I moved, things around. But at the end of the day, what have I learned? I've learned that I have a strong conviction because I understand Bitcoin. So when I bet on, I'm not betting on Bitcoin really. I'm putting my energy in something I know that is finite, right? So I'm not speculating really on anything. I understand what it is. I understand that it's a
Yep.
container, and that it has other implications as it relates to cybersecurity, and it's got use cases abound. Clearly, in the narrative layer, Iran just circumvented the ability and the power and might of the U.S. to sanction other countries and other nation states and other entities. So I can kind of see the writing on the wall, and so there's a logic baked into. Okay, so it makes sense for me, even though you could say, well, then it makes sense for you to invest in MSTR. Yeah, to a degree, right? Because again, it's like it's leverage Bitcoin, so it is going to nominally go up in value in dollar terms, and for that reason, Misty still makes sense. But along the way, you're going to get shaken like a.
Oh, yeah.
Yeah, like
You're
it's
gonna
been a
feel it.
rough ride. Now that doesn't mean that it isn't all coming back at some point, and it probably will. Unless and as I understand these ETFs, it's harder for them to gain it back than it is for them to shed it, right? The nominal value.
Mhm.
But when I look at things like SATA and STRC, I find the thing that I was looking for, which is the sort of underlying stability. That because I remember when I first started talking about ulti with you, Krash, I said I think of it as a cash position because it wasn't moving much. It was like there was a period of time where it was just straight across. It was paying consistent distributions
Yeah.
at a consistent distribution rate, and it was holding its value for the most part. So the logic was sound. The problem was the vehicle, right? And then I said, okay, well, I'm gonna take the shotgun approach and I'm gonna diversify across all these different income funds. And Chippy was on the short list. I just didn't end up doing it because honestly, I was having a hard time keeping track of it all. I was like, well, this is getting stupid because I don't really think I know what I'm doing. So as soon as SATA or STRC at the scene, I was like, I think I've got it.
Yep.
I think this is the thing. So then I started to say, okay, well then all I'm doing is I'm replacing the diversified portfolio, which there still could be a use case for that from a margin perspective. But as soon as, like you said earlier, Krash, STRC and SATA and those instruments are looked at the way they should be looked at from a stability standpoint, then I'm like, okay, that checks all the boxes, right? But then I can create the same effect with less moving parts with just a distribution across the Bitcoin yield curve. With SATA and STRC being my dollar proxy essentially, but having a much more enticing yield and potentially in the future an even more stable marginable asset. So I end up kind of looking at it through that lens, which I know is very simple. And honestly, I always think about Francis because he's like all over the place with this stuff, and I don't doubt that he's doing his homework. The question is, how much time is he spending doing all of that? And at the end of the day, what's the actual overall net effect? I'm sure he's going to pick some winners, but I mean, once you factor in the losers, what does that actually like add up to in fiat terms at the end of the day, considering that is the sort of thing we're chasing?
Right. Yeah, you're just spreading yourself too thin. Like, I mean, just as me, I say this almost every week. I like the idea of Tesla, like to Adam's point. Like, that is probably where I would go as well. But like, I don't know enough about it. I'm always in strategy and strive, the reports of that. Like, and Bitcoin. Like, I can't look into anything else to put like 50 grand and be safe or like debt, and be able to, you know, live with myself if it cuts in half or whatever, like, so
or even if it just takes like a 4-year pullback.
Yeah.
I ultimately think Tesla is going to be insane value wise, but is it by the time is worth that much? Is it going to be, is the deflation going to be kicking in at that point?
Well, and what would you have missed out on that time then too? Like in another position that you did know about, so.
Well, and at the end of the day, the thing that I think everybody's going to be competing for in the very near future is the only truly scarce asset.
Yep.
And that's ultimately 100%. Where it lands, right? So even the amount of money you hold or the amount of the position you hold in SATA or STRC, which is part of the reason why I love the idea of having a Bitcoin yield curve portfolio where one side of the portfolio has created so much available margin that you can use that margin, Robinhood's money, to pay you a free income, free and clear.
Yep.
And that at any point, there's no risk because you can literally trade out of that position. And in the meantime, while you hold it, you've got your main asset holdings, which is majority Bitcoin or Bitcoin proxies. And then you've got your income engine, which is essentially margined STRC and SATA and whatever else is out there that works the same way. And then that's it. So you have all of the upside exposure of Bitcoin swallowing the world and the value of everything. And you're essentially deflation proof and inflation proof. And you've got this sort of like, you've given yourself a UBI on Bitcoin, on Robinhood's dime, and everybody wins. Like there's no negative, right? There's much less volatility and risk because you really don't have to keep your eye on multiple targets. You're just basically doubling down on your Bitcoin thesis. And we've seen enough evidence that we all believe that is going to be the king as far as like containing value.
Here's a different framing to think of deflation. Deflation, in my estimation, means that the money you currently have in whatever form just becomes more valuable. So think of it that way instead of the opposite of, hey, deflation is going to devalue, because I think that was the original premise, and I think that's why we live in an inflationary system currently, is because that is a problem the way it works today. But the way it's going to work tomorrow is deflation is actually a net positive. So we're going into sound money, and that's so hard for most people to wrap their heads around. And to somehow we have to disarm deflation, because it's always had a negative connotation.
I agree.
Disarm it, maybe call it something else. I'm not really sure, but it's just it's a framing, because deflation is not really going to devalue your holdings. It's only going to revalue your holdings.
Yeah. Oh, I think you're right about that. I don't necessarily think those things are not going to be valuable. The question is, how valuable are they going to be against the really true measurement of value, which is, I think it's going to be interesting. We talked about this last time, right? When things are actually valued in terms of watts or sats or whatever.
Yeah, and I think that's coming. We're seeing the beginning stages of it. It's really cool.
Good deal. Yeah, I mean, that's pretty much all we kind of covered all the points here, guys. Ryan, Meta, you guys have any final thoughts or what you're kind of looking forward to next week, maybe?
We'll see what happens in the global affairs of next week, I guess. But
Yeah,
probably dictate what we talk about.
Yeah, I know we didn't really talk too much about that today, the current affairs.
No.
But I would just say, for me, the first thing that I'm thinking of is, well, MSTR has earnings call next week. Strategy. So that'll be fun. And hey, did you guys see what Adam posted in the chat, the Frogs and Friends or Misty chat? That Yield Max or Misty is doing a different. They're kind of playing for the long, like they're kind of playing for not to get capped on the gains after this earnings call, because the volatility is like lower than it normally is before earnings. Did you guys see this post, basically?
Yeah, I did. I ran that through Grok too and asked it to explain it in layman's terms, and I screenshot it. I'll send it to you.
Nice. Okay.
I don't know if I can do it right now while we're chatting.
Yeah. Okay, that's fine.
But
Meta, did you...
I'll send it to our Frogs and Friends group.
Didn't.
Okay.
I didn't. I'm scrolling through, but I'll wait for you to send that over, and I'll take a peek at it, the Grok's analysis of it. But no, that's great, because I would love to be able to recoup at least some of those fiat losses. I always do air quotes when I say anything fiat related, because that excites me. And honestly, at this point, if Misty just goes back to what it was before everything kind of fell apart, say midsummer of last year, if it kind of works its way back up to that and then holds there for, a slow grind up, man, that would be ideal.
Oh yeah, Adam brought up a good point last time we were talking about this. So like back to the all-time, if we would go back to the all-time high with, if you take this reverse split into account, it's like around $210. And that's only at Bitcoin's all-time high. Like, if we're expecting, I don't know. I think, to your point, obviously with the dividends we got and stuff back, like our average is lower now. But I think, I don't know. I think we'll be. I don't know. I'm gonna go out on a limb here and say we're gonna be kind of close. Even if you think Misty can even recoup half of what MSTR does here.
Yeah, well,
I think so. Fireworks are on deck, man. I just don't know when. I mean, I think, like I said, I'm speculating totally, but it seems like Saylor was hinting at something. The July thing could be. I've learned my lesson not to get my hopes up or date fag too much, but at the same time, I'm kind of like, it's hard not to. We know it's inevitable. Something's got to give, and it's just a matter of time. I think that we're in a very short period of time window here now for something to move, and it could be further, ripped down one last, gasp.
Yeah, it could be in October, could be July, like we said, could be tomorrow, could be next year. Like,
yeah, my intuition, everything is agreeing with you, Meta. It's like I feel like we're in a short window. Like I actually just reconfigured my thinking and instead of buying all these ETFs, every dollar I've been getting has just been buying Bitcoin directly now.
Yeah.
And
Yeah.
I
and
know.
I'll use my divvies to buy more shares, but I haven't bought any shares recently, except for divvies, for probably a week and a half now. And every dollar I've gotten is going into Bitcoin right now because I'm just I think it's holding here, and I don't think it's going to be holding for long, And I think we've got a few months maybe, and then I think you're going to see a potential rip starting. So
I think
that's just what my
wise.
gut's telling me, and it's telling me to panic and just buy more Bitcoin right now. So that's how I feel. Not panic, but
I agree. I've been doing that as well. Like I have
Yeah.
been kind of, yeah, I'm adding the blocks and stuff, but I'm like, no, I want this IBIT. I want more IBIT at this point, like just to be able to then Meta's point, like you need to have that asset anchored there to get even more margin potential. You can't rely on the margin potential just from the share price growth of the income funds. Yes, it's possible, but that's not the most economical way to do it. The most economical way to do it is either, big IBIT or MSTR or even Strive.
The way to think of it too, Krash, is there's literally no upside. I mean, there's no cap on
Yeah.
Bitcoin
Yeah.
in fiat terms. It doesn't exist.
Yeah.
So
I agree. That's the thing. This is gonna be a fun next couple months. Even though we say that every week, it's gonna be a fun week. But man, guys, this has been beautiful. This is probably our longest episode to date yet. So fun stuff. Stay out of that collateral damage, everyone. Let us know in the comments what you guys are doing this upcoming week. What are you looking forward to this week in the Bitcoin space? We didn't even talk about the Bitcoin conference either. So there's that. But then again, people said no one was there. And we know G Money was there. So that's awesome. But guys, until next time, enjoy your weekend. Yep.
You said no one was there?
No.
Oh.
There were fudsters on
Oh, I
Twitter
got you.
saying
Yeah.
there was no one there. But obviously,
Yeah.
there's the fun again. But guys, until next time, stay out of that collateral damage. Thank you so much for watching, and check out our previous Frogs and Friends episode right up there.